Welcome back to investingnews.com. We're speaking with Bruce Lane from American Uranium. Welcome, Bruce.
Hi, John. Good to be here with you.
You're welcome. So just with the company focus on uranium in Wyoming, what's the strategic reason behind this?
Yeah, we chose the US as the optimum location to be developing a uranium mining project. Way back in 2018, 2019, we could see the situation of the US being the largest buyer of uranium on the planet, needing about 50 million pounds a year and really producing nothing at home. And at the same time, we could also see that nuclear power production was on at the start of a resurgence, and what we've seen come through in the years since then is a hugely positive tailwind for the sector, with nuclear power being supported in the US. So that's part of it. The other part of it is that Wyoming has been mining uranium via in-situ recovery methods since the late 60s and early 70s, and was really the heart of uranium mining in the US. Back in the 80s, the US produced 44 million pounds a year, so it was largely self-sufficient, and Wyoming was a key part of that. So, we're there because it's a state we know we can do business in, we know we can get projects permitted in, and it has a very rich and deep history of uranium mining. So those are kind of two of the main factors of why we're there and why we're in the US.
So how is the US supporting domestic uranium production as well?
Yeah, there's a lot of programs in place now. Look, it kind of kicked off, I think, just going back a step, there are 4 agreement states in the US: Utah, Colorado, Wyoming, and Texas. And they're the states where most of the uranium mining occurs, pretty much all of it in the US. So those states are independent of the federal government when it comes, or largely independent when it comes to permitting mines. So there's been a history there of giving those states, the ability to get on and get mines up. What's happened more recently is the federal government has stepped in and put programs in place to accelerate permitting at the BLM level, but also to support project programs with transparency and the Fast 41 list. And then most recently, uranium's been returned back to the critical minerals list. So that only happened just before the government shutdown, and so the impact of that is working its way through the system. We've got the Department of Energy's Defence Procurement Act consortium being kicked off, so that we know the Department of War needs a fair bit of uranium, both obviously for weapons, but also for energy for the bases. And there's been an announcement of 10 sites, or 9 or 10 sites, that are going to have small modular reactors on military bases. And then, look, on top of that, we've had announcements like the federal government pledging $80 billion to work with Westinghouse to get 10 new gigawatt-scale reactors installed or started, construction by 2030. Then on top of that, we've got the Russian importation ban, which outlaws Russian uranium importation from 2027. There's currently some waivers in place, but effectively that ends. So that's just a sample of some of the programs that are in place to support the domestic uranium mining nuclear fuel business. And there are a number of others. I could probably fill up another 10 minutes with a description of all of them, but there is an unequivocal support from the Trump administration to support all forms of energy, really, that provide firm electrons to the grid, but in particular nuclear. So, very supportive.
So Bruce, now we have the background on demand. How can American Uranium benefit from this?
Yeah, I think the obvious opportunity here is that with a supply gap of in excess of 45 million pounds just for domestic supply in the US, there's an opportunity to get projects into production and supply the utilities. And that's why, as I said before, we're there. The largest customer on the planet is in our jurisdiction. If we can get yellow cake into a drum, we only have to send it to Illinois. to the Metropolis facility at Convidine, which is the main facility at the moment. So there's an advantage in that, and we believe that there'll be a strategic premium paid for US pounds, and that's certainly been the historical case. So the opportunity for us is to get our project, which is already one of the most advanced, of the junior and independent companies in the US, to get that through the cycle in development and into production. And we think there's an opportunity there to do that in a time frame which would deliver pounds potentially in the 29 or 2030 region. Obviously, there's a lot of things that have to happen before we can get to that, and I won't give you the full disclaimer, but that's the opportunity for our Lo Herma project.
Just to help investors understand, how does the geology of Lo Herma compare to, say, other producing uranium projects?
One of the reasons we really like the Powder River Basin and most of Wyoming in general is because the geology lends itself to in-situ recovery mining, and in particular to alkaline in-situ recovery mining. So we're about 10 miles to the west of the largest permitted in-situ recovery facility in the US, being Cameco's Smith Ranch Highland. So it is licensed for £5.5 million a year and has a history of around 20 odd million pounds of production. Our geology is very analogous to what we believe exists at Smith Ranch, for instance. It's very similar also to what we see down at Lost Creek in the Great Divide Basin, which is a producing plant owned by UR Energy. And by the way, they are also at the moment constructing a project about an hour or so the other side of Casper from us, which is also an alkaline recovery in situ plant. So they're expecting to have production there in the early part of next year. So our geology is in the Wasatch. We're in the Wasatch and the Upper Fort Union, which are two of the most productive formations. There are some projects around in the deeper and older Lance Formation, which is where Peninsula Energy's plant is. Slightly different in that they require an acid leach to be able to extract or get the recoveries and the borefield flow rates that they're targeting. But most of the other projects in Wyoming in geology that's very similar to ours are large captured basins, and they're roll front sandstone hosted uranium. And as long as we've got an aquifer there that has the flow rates and sustains pumping, which is what the ore body sits in, then generally speaking, if they're far enough, if they have enough head below the level of the aquifer, then we're in business for in situ recovery mining, and that's what's unique about the area, is that it has that geology, but also where we are, that it's amenable to alkaline leach, which we believe is a little bit simpler, a little bit cleaner, and a little bit cheaper from a construction development point of view.
Now, Bruce, the real key for investors from a pure analysis point of view, how does the company compare with listed peers?
Yeah, it's hard to find a directly analogous peer company. But there are a number of companies we can look at that are in the earlier stages. Most of them don't have an advanced ISR development project as a junior company. We can look at companies like Premier American, but we can then also, who are earlier stage, but they've got a conventional project in New Mexico. Now, they appear to have a higher valuation per pound of inventory than we do. We've been valued at around, somewhere between 60, 70 cents and $1 per pound of our inventory. We have 10.32 million pounds in total resources. 30% of that is indicated, or 28% of that, but 32% of the resource at Lo Herma is indicated. So we think that we're probably getting a valuation around 90 cents $1 a pound at the best. Some of our peers are getting a valuation of, $2, $3, $4 a pound, and some of the transactions around us have been done at higher multiples. So, to do a direct analysis is very tricky. Most of the larger companies have got, multi-$100 million dollar valuations. And so, because they're in production or because they've got assets that are more advanced. And so that's really what we're trying to do, is push ourselves through into the consideration set of the large companies that are currently in production and achieve a valuation which is much more akin to theirs.
Finally, Bruce, what are the key catalysts investors should be looking out for?
Yeah, we're drilling at the moment, and we recently announced that we've conducted some hydrogeological testing to test the aquifer flows. We'll have the results of the hydrogeological testing hopefully before Christmas. We'll drill up to Christmas, and if the weather in Wyoming in winter allows us to continue right up to Christmas, we may get the program finished. It is possible that we'll have to drill again for a week or two in the new year, but we'll see how that goes. At the end of that program, we'll have results, and then our ambition is to upgrade our mineral resource estimate in the early part of next year. Once that process is done, we'll look back to our planned infill drilling program, and we'll tweak that based on the results from the program we're doing now. The infill drilling then would lead us on to potentially another resource update and then a scoping study update. So we published an interim scoping study earlier this year, and then what we'll do is update that study, and hopefully we'll be able to publish the forecasts and the production rates in the public domain at that point. There's also a little bit more metallurgical work to do. We did some initial metallurgical work for the scoping study. The results were very positive for alkaline leach, using pretty much the same lixiviant that Cameco uses up the road. So we'll do more tests just to increase the sample size, but all of that will be fed into the scoping study update for next year. So those are the key catalysts to look forward to, and we think they can really move the company's valuation along, particularly if the uranium term price continues on, marching northward. I think it's sort of up to $86. It's gone up from $80 to $86 in the last 5 or 6 months. And that's the number we're really focused on. Of course, we can't ignore the spot price, but the term price is really what we focus on, and we see that continuing to march northward. Look, we hope that continues. We think it should continue. The market is very tight, and we see the utilities coming back into the market to secure pounds going forward. So the conditions there, we think, are very positive for the first part of next year and on into 26.
Very busy time, Bruce. Thank you very much for updating investors today. We look forward to speaking with you again soon.
Great, thanks, John, and we'll talk soon.